Hey guys, it's your loan officer Linda here, and in this video I'm going to emphasize a little bit more information on the non-QM or the non-conforming loans. These are going to be my favorite types of loans because if you were told that you don't qualify because of you don't make enough money on your tax returns, for example, there's still a possibility that you're going to qualify for these non-QM, non-conforming loans. And essentially what it is, FHA, conventional VA, they conform to the government guidelines. They're going to follow what those loan programs set. So if you're thinking in your head, I make good money, I have decent enough money, and I have money saved in the bank, I really don't understand why I can't qualify for a loan. These programs are going to keep income, assets, and credit into consideration in different ways. Color outside of the line, so to speak. And the verification methods are going to be a little bit different as well. These are going to be considered investor type loans, meaning that they're just not the government or the government backed loans. You don't want you to make the mistake of these loans are specifically only for investors. You could potentially buy these homes as your primary residence, as a second home, and then each individual lender is going to have their own criteria. So for example, we'll take the bank statement loans. Those are very popular loans for people who are self-employed. I probably have access to over 20 different lenders who can do bank statement loans. And Bank A is going to keep certain considerations for you to be able to qualify for their loan versus bank number 2, who has a different criteria. So all of these, again, keep your income, asset, credit into consideration. So if you're wondering why you can't qualify for a loan, but you were only looked at as an FHA, VA, or conventional, one of these loans may be for you. A lot of the times I find that people who have been told over and over, they just want to qualify for a home. So let's go ahead and get into the different types of non-QMs. There's tons out there. Again, it's impossible to go over all of them, but these are going to be the more popular ones. So we have your bank statement loans, private money or hard money loans. You have foreign nationals. So yes, foreign nationals can purchase real estate here in the United States. And then ITIN loans kind of fall under that as well. We have asset depletion, bank statement, and W-2 hybrid loans. So you can totally be making a W-2 and then in the same field work as an independent contractor. So we'll be able to use both incomes to qualify you. DSCR loans, these are going to be debt service coverage ratios. This is another really, really popular non-QM loan. And then we have jumbo loans. So how do you know if these are going to be for you and who are they for? So bank statement loans being one of the more popular ones that we see, it's going to be typically for people who are self-employed. Now, the difference between somebody who makes a W-2 versus somebody who is self-employed or an independent contractor. W-2, you show up and you get a paycheck. You get all your taxes taken out for you, etc., right? And then you get what your net income is. People who are self-employed get paid for their work and then they file taxes on their own tax returns. So if you have a really good accountant, name of the game is to limit your tax liability to Uncle Sam. So you're going to write everything off. In the eyes of the lender, you write everything off. You made $100,000 for the year, but you wrote off $99,000 of it as business expenses. Your income really is only $1,000 a year. Then I divide that by 12, and that is your monthly income. So most people who are self-employed kind of play that game, but it hurts them in being able to try to qualify for a loan. In a bank statement loan, what we do is we don't look at your tax returns. We don't care about them. We take either 12 months or 24 months average for all we know. And it just depends on which one makes the most sense for you, right? Maybe the last 12 months was lower in income, but overall in the last 2 years, you made really good money. So we look at the regular deposits that we see in your bank account as income. So let's say you're an Uber driver. They're 1099. We're gonna see all of those regular deposits of your income per day. I'm not exactly sure how they get paid, to be honest with you, but I would imagine that Uber pays you per day what you get, what you have driven, how much you've worked. We add that all up and we divide that by 12. Now, again, each lender is going to have their own criteria. There is business expenses that we have to consider. So there is a mathematical formula. But overall, we see that people are going to report a higher income if you're self-employed through the bank statement program. Private money. I have a special relationship with private money, or sometimes it's called hard money. I'm going to tell you my story in another video. This is what I used to buy my first condo, and kind of just set me up for realizing the power of real estate and owning it. But that's going to be another video. Essentially, it's a hedge fund or a private investor, and the individual sets the term. These are typically going to be pretty easy loans. It's going to be Joe Schmo has, $100,000 that he wants to invest, or, I'm not going to give it a number. Let's just say, he has some money he wants to invest. And part of that investment is somebody who can't otherwise qualify for the loan, but he wants to help you buy that home. He's not doing it out of the goodness of his heart. He, she are not doing it out of the goodness of their heart. They are going to do it with a high return on their investment. Okay, but it's somebody who just give you money to buy your home and not really necessarily require all of the bells and whistles of underwriting criterias of other loans. So for national ITIN, these are going to be people who don't have a social security number or citizenship in the United States. Asset depletion, we use the substantial assets to qualify instead of employment income. So essentially, if you have a 401k, you have a home, you have bank accounts, you have stocks, we're not going to ask you to cash it out to buy the home, but we're going to add it up, again, mathematical formula. And as long as it can, if things got hard or bad, we know that you could liquidate those and have X amount of years left of money to be able to pay that mortgage. So we use that to qualify you. Bank statement, W-2 hybrid, kind of the same thing. We consider both regular cash deposits and W-2s combined. Here in Las Vegas, we have a lot of people who are W-2s as bartenders or servers or whatever, but then they also make a lot of cash. And at the end of the night or every couple of days, they deposit it. So we can use both, combine them for your qualification. DSCR loans. Now, these are going to be really popular for actual investors, and these are only going to be for investors. You can't use a DSCR loan for a primary or a second home. For the reason being is, it's pretty simple, to be honest with you. When we are asking about the three criteria, income, assets, credit, really it's asking a question. So the income part is, how much do you make per month? Because if we were going to let you borrow this money, we want to know your ability to repay back the monthly mortgage. So a DSCR loan uses the rent flow of the property as income. So we don't use your own personal income. We use, if you were to buy this house, what is the fair market rent? Let's just say, hypothetically, it's $2,500. And the mortgage payment is $2,000. Well, there you go. That answers the question of the income part. If we were to let you buy this home, how would you pay us back? Oh, with the rent. Beautiful. Now you qualify. Jumbo loans. Jumbo loans just essentially exceed the conforming loan limits. Every county and every year, it's different. HUD sets those amounts. So here in Las Vegas, we're probably going to be the average, loan limits. However, if you live in a high cost area, it's going to be, we're not going to have the same loan limits as San Diego, for example. But essentially, it just exceeds it. Everything else, it essentially falls in line with just a regular conventional loan. So this is going to help a lot of people who have been told no over and over that you don't qualify for a loan. Maybe, I don't know what the reason is. Maybe you spoke to a lender who didn't have access to this or isn't familiar with it. And because it's reading a lot of guidelines, guys. Because this is not as easy, you can go from lender to lender, bank to bank. FHA, VA, conventional, we all go by the same guidelines. These non-QM, non-conforming loans requires a little bit more work. First step is to figure out the financial baseline. What are we working with? What can you do? What do you want to do? And that's in my video about talking about how to even get started. We talk about that. We talk about establishing the financial baseline. Who is John? What are we working with? And what does John want to do? And first step is to find out which loan program may work for him. Maybe he's been told over and over that he doesn't qualify for an FHA, VA, or conventional loan. And so he just kind of gave up because they just kept telling him no, for whatever reason, he doesn't qualify for these. But he knows he has the money to buy the home. He knows he has a credit to buy the home. And in his mind, he makes decent enough money. So hence the reason why I want you guys to keep an open mind. Unless you have shit for credit, no money, and you make no money, I have a loan for you. You may not always necessarily agree with the terms, but that's not to say that you don't qualify. So keep an open mind and let's talk about it. Give me a call, 702-574-1877. Talk to you soon.